Well, good afternoon and welcome to the Climate Finance Studio here in AIB. You're all very welcome. My name is Brian Hayes. I'm CEO of the Banking and Payments Federation in Ireland, and I'm joined here in the studio today by Yvonne Holmes and Laura Quinn, and we're going to hear from both Laura and Yvonne later. Together with all our banks, wholesale, retail, domestic, international banks here in Ireland, we're delighted that you've joined us for this session this afternoon, which I know will be a great session. And I want to especially recognise and thank Louise O'Mahony, who's well known to many of us for all of her work and her advocacy as part of the industry here in BPFI. Colin Hunt couldn't have been any clearer on Monday when he kicked off Climate Finance Week, when he said, we have just about 8 years between now and 2030 to make a big difference. And as you know, other countries are ahead of Ireland in terms of the green transition. We're very much coming from behind. And if we're going to hit our net zero targets by 2030 and indeed by 2050, we have a really big mountain to climb. So our industry, the banking industry here in Ireland, which remains the key financial intermediary in the formation of capital investment for businesses and households across the country, plays an absolutely critical role in making the ambitious climate targets a reality. Now, we're the people who make sustainable investment happen, and to help transition to a cleaner future and to help those new jobs to be created and sustained in the new economy. So that's why this session is so important. Every financial decision we take as a sector needs to take climate into account. And I want to make it crystal clear from the industry's perspective that climate action is absolutely the top priority for BPFI, for our members and for the entire industry, both here in Ireland but across the European Union, where of course with members and colleagues from the European Banking Federation, we work very closely with them on sustainable finance. So a big thank you to Sustainable Finance Ireland and its partners, are the Department of Finance, AIB, and especially Climate Finance Ireland 2021, for all the brilliant, thought-provoking sessions and indeed leadership that we've heard this week. The IMF has estimated that the climate transition here in Ireland will need an investment annually in the order of about €20 billion. That's the view of the IMF. Now, it has been estimated that 2/3 of this investment will come from private market-based and bank finance, and about 1/3 from the public sector. These are staggering amounts. And the banking industry is going through, as you know, a remarkable period of change and adjustment right now. Big challenges are up ahead, from digital to cyber to climate. And the commitments made by our members on UN principles are real. They're not entered into lightly by banks who fully understand that their words need to be matched by actions. These commitments will adapt, bank business models and strategies for an entire generation. I hope that this session will give you a clear view as to what's happening across the Irish banking sector as we all deal with the issues of global climate transition. And in Laura Quinn from TD Securities Global Finance and Yvonne Holmes from AIB, we have two brilliant people who will give you an example of what's happening here in Ireland from two very distinct standpoints. And they will share with us their experience to date in integrating ESG into their own bank. So, what have we in BPFI been up to of late in this whole space? A recent survey from our own members found some very interesting things. 75% of our members were actively involved in their group's implementation of sustainable finance. Over 50% see an opportunity for their Irish operations to take a global leadership role, especially so in new products and services, and especially so in regulation and risk capabilities for the group out of Ireland. 37% of respondents are already involved in integrating climate risk planning, and about 72% saw opportunities in terms of the next 3 years or so. So our survey highlights big interest and a growing awareness across all of our members in the entire climate area. Now, the banking sector in Ireland is, I think, well placed to deliver on the sustainable finance agenda, not only from a domestic bank's perspective, but also because of the active presence of banks with European and global reach based here in Ireland. We need to turn the advantages of being the 5th biggest financial service centre in the European Union to the advantage of climate change at home and abroad. It's the very presence of international and domestic SSM and LSI banks which can help shape the climate change finance story. Ireland is now becoming known as a green hub, and our status as a major financial services centre here in the European Union can only help promote the skills and the expertise that's needed on the climate change finance front. So throughout 2021, BPFI have organised a really successful number of SF Insights. Our workshops demonstrated how important the cross-functional focus on sustainability is, from finance to risk strategy to compliance to product development. All of these contribute to improving the awareness of our members and provoking the kind of ambitions that we all need to see. And as you know, the upcoming ECB stress tests next year are so crucial in identifying and managing climate risks in the portfolio of banks here and indeed across the European Union. BPFI also sits on the Sustainable Finance SkillNet Committee, and we value the opportunity to work with SkillNet and others to build on the training and skills that are so crucial for finance professionals here in Ireland. So what are banks doing right now in developing their own products and services in this space? Banks, as intermediaries and advisors, are today helping to finance the transition to a carbon neutral future. In policy terms, the banking industry is central in delivering on EU and national climate objectives. And we do this by helping SMEs and corporates adapt their own business models to go green and to find efficiencies in their supply chain. Banks support companies to structure green social sustainability, help in the production of green products, conduct ESG due diligence on M&A and private equity transactions, stress test clients' ESG strategies, work on disclosures, risk rating, provide sector-specific advisory information on ESG risks and market standards. It's a very comprehensive list of services that we provide. But the range of services that our banks can provide speak to that unique business-bank relationship that has always been at the core of business banking. A strong relationship between businesses and banks will also help the transition to happen. We should not underestimate this. Indeed, both our own international and our domestic banks are well on the way in the design and delivery of green products for households, SMEs and corporates right the way across the country. Recent successful green bond frameworks issued by banks has helped the financing of renewable energy, sustainable water management, green buildings, climate change adaptation, in addition to supporting projects such as clean public transportation or indeed energy efficient social housing, especially so in the public sphere. This week alone we saw AIB double its climate action fund to €10 billion, and we learned that TD Securities is a lead bank manager for EU's first green bond with a 15-year maturity to raise €12 billion. This is the largest green bond ever issued, and it was announced on Tuesday. That's happening here in Dublin and across Ireland for the entire European Union. It's an amazing international success story for financial services here in Ireland. On the domestic front, our members are developing more green products such as green mortgages, as we know, green savings products, investment products, e-car and home financing, all of which is responding to investor and indeed client demand. And in the retrofitting and the new homes mortgage space, lenders offer considerable discounts on mortgage and unsecured loans where the customers seek to improve the energy efficiency of a property. We recently welcomed, on behalf of BPFI, the recent NDP commitments where 1.3 billion has been ring-fenced from carbon tax receipts for national retrofitting plans out to 2025 with additional funds each year, as we saw announced in yesterday's budget. This will support the government's target of retrofitting 500,000 homes to a building energy rating of B2 and the installation of 600,000 heat pumps, of which 400,000 will be in existing homes by 2030. So BPFI is absolutely delighted to participate in the development of the SF roadmap. Now, this roadmap, launched by Minister Donoghue on Monday, with the ambition of enabling Ireland to become a leading hub for sustainable finance, provides the framework for progress in key areas such as skills, innovation, and crucially, access to data. The entire sector needs to collaborate, as we do with government, and indeed to work with our regulator, the Central Bank of Ireland. These are crucial partnerships if we're going to make the transition a success. So, as they say, a lot done, more to do. Where did we hear that before? The sector is always aware of its responsibility and aware of the difference we can make. And I think it's also important to say, from a reputational perspective, we shouldn't underestimate the importance of what we're doing this week and what our businesses are doing in terms of leading in the green transition. By actually making the difference on climate change as an industry, I think we can go a long way to kind of help resolve some of the reputational issues that have been such a feature of the entire industry, not just here in Ireland, but across the European Union for many, many years. So finally, we shouldn't underestimate the leadership of a younger generation within the sector and what they're providing. Banks are, of course, responding not just to customers, to policymakers, to society. They're also responding to their own staff, who can be the real change makers. So let's meet two of them who are joining me on the panel here today. Laura Quinn. Laura is Managing Director and Head of Primary Markets for TD Global Finance. As Managing Director and Head of Primary Markets, Laura is responsible for the origination and syndication of all fixed income products in multiple currency markets. She focuses on the development and growth of existing and new client relationships across supranational agencies, financial and corporate issuers. Laura has 20 years' experience in capital markets, has worked in many different countries, and currently runs the origination and syndication businesses for TD Securities. In her role, she's served TD Security clients here in the European Union. Yvonne Holmes is Chief Sustainability Officer for AIB. Yvonne is the person within AIB who makes all this stuff happen, and she's the responsibility for the development and the implementation of sustainability strategy across the AIB group. She's a member of the Chambers of Ireland Sustainable Business Council and is chair of the Sustainable Finance SkillNet group. Yvonne's previous roles include Head of Analysts and Head of Consumer Strategy, and Yvonne has led a number of key programmes across the AIB group, including retail transformation, core system replacements and digital customer experience. So, to you first, Laura, could you maybe map out and tell us a little bit about the sustainability journey of your own bank here in Ireland to date?
Sure, thanks Brian. The tone is set from the top down here at the Toronto Dominion Bank. Our CEO has said that it's a matter of critical importance and is a huge priority to us globally. It's part of everything we do and every conversation we have. There are three things I wanted to mention about the bank, if I may. Firstly, TD is not new to the concept of environmental responsibility. We were an early mover on emissions accounting and have been operationally carbon neutral since 2010. We actively contribute to the various working groups such as ICMA, Green and Social Bond Principles, and we have underwritten over $30 billion of US dollar equivalent in ESG bonds to date. Secondly, we have invested heavily in developing sophisticated strategies over the last 5 years for several reasons. There has been increased government regulation as the market has grown rapidly. S&P expects the ESG space to hit $1 trillion US dollars this year. And there has been a massive increase in client and shareholder interest, coupled with a greater sense of urgency since COVID. Finally, our response has been robust. We have 3 distinct teams who deal with everything from reporting to analysing our loan portfolio. Here in Dublin, we work closely with the Sustainable Finance and Corporate Transitions team, who provide advisory services to our clients. The team comes from a broad mix of sustainability consultants, climate scientists, reporting experts, alongside bankers. So it's a very unique setup that we have here at TD.
And I was interested to hear all the work that's going on in TD from a global perspective, but from your own activities, the ESG activities in Dublin, what kind of trends do you see emerging, given that global perspective that you have, but also what you're seeing in the European Union right now? What kind of trends do you see emerging?
Sure. Well, firstly, in line with market, issuance this year has already surpassed last year's volumes. Here in TD Dublin, over 40% of our underwritings fall under the ESG umbrella. It's no surprise that the majority of this is in the SSA space, though we've been quite active in the financial and corporate space also. The EU has been an absolutely huge contributor. Again, here in Dublin, we lead managed 2 social bonds for them under their SURE programme, and yesterday we priced their inaugural green bond, which now holds the record of the largest green bond in the world. Secondly, I would like you to know that the market flourishes away from euros and US dollars. We're seeing increased supply in currencies such as sterling, Canadian dollars and Australian dollars, but also in emerging markets such as Mexican peso and Indonesian rupiah. Green bonds are generally trading at a 1 basis point premium. This greenium reflects the value created by transparent use of proceeds. Finally, as my last comment, I wanted to say that demand exceeds supply in this market space. Issuers can print larger transactions under their ESG framework than they can without, but issuers are struggling to find projects. More consensus on the definition of projects and standardised disclosure is necessary to increase assets available to issuers and see this market improve even further.
I think that's a really important message, that you want to see projects come forward. And as we said in the opening, I mean, the announcement on Tuesday in terms of the 15-year maturity bond, that you guys were absolutely central to producing about 12 billion of investment across the European Union. I mean, that's a staggering story that's happened here in Ireland. Most people aren't even aware that the green bond transition, which I know the President of the Commission announced as one of her big new priorities, that a large portion of the work behind that, the financial engineering behind that, is happening in this country, a small country. Could you just give us some perspective on how that all happened in terms of the expertise that you have here in Ireland as TD Securities, and what kind of difference has that made in terms of your own business, in terms of promoting the kind of skills that you need as well within that business?
Yeah. Well, firstly, this is the largest green bond with 12 billion outstanding, and as you said, it's actually a mind-blowing number. I think it's going to set a blueprint for this market going forward on how green funding is going to operate. The deal had a final book size of over 135 billion, which again, it's just incredible, such a number, with over 500 investors participating. It has huge ramifications for the liquidity of the market. The sheer size of the bond forced investors who had decided themselves to stay sidelined for a period because they didn't necessarily trust in the consistency of supply to reassess the market, just given the massive volumes that was being undertaken here. I think it's also important to say that the allocation process was tough, as you can imagine, if we've got 135 billion of orders and we're only able to print 12 billion. I think the EU went about this in an amazing way of assessing investors and relying and pointing to online sources of what their commitments were to net zero, what their publicly available statements was on ESG, and that was used as the benchmark for how the allocation process would go. And as you can imagine, the investors, they had a preference to those who had that publicly available information out there. But in Dublin, I mean, we feel really privileged and proud to have been involved in that trade, and it's amazing as an Irish person working in an Irish bank to know that we're helping the European Union and our own country. And it's already been touted that that Ireland will receive some of this green funding from Next Generation. So it's just really encouraging to see that happening here in Ireland. And again, just to stress, like, that bond was originated, it was executed, it was priced here. Our sales force here in Dublin sold the bonds, they're being traded here. There was a very strict process leading up to the trade in terms of how they mandate using an RFP, and everything was done here in Dublin. So it is great, and it's definitely a proud moment for us.
Yeah, it's fantastic, and it kind of speaks to the interaction between international domestic banking here, that this is happening in Dublin.
Yeah.
This is happening in Dublin with an impact across the European Union. Yeah. And it kind of gels in very neatly, I think, with something the Minister said at the start of the week about building up capacity and skills. Just very briefly, what kind of skills do you think we need to see as we take this forward, and what you guys have done in terms of the extraordinary success in terms of the bond. What kind of skills do you think we really need to encourage and get more of in terms of building up the market capacity here in Ireland?
In terms of finance,
Yeah.
is it? Well, I think Ireland has done a great job over the last couple of years. It's incredible for me as someone who's been out of Ireland for 20 years to be able to be back home working in a market that didn't exist really in a niche skill set. I think, you know, institutions like yourselves are doing a great job. I've only been in Ireland while I've been in lockdown, so it's great to get help from you to be able to meet other counterparts who are doing, you know, the same work or doing variations of the same work, and it's very encouraging. I think it's the future is rosy. I think for us
Great.
here. So,
well, listen, thanks a million for that, Laura. I'm going to turn to Yvonne now, who is well known to everyone in AIB because she is the sustainability person who's responsible for delivering so much for the AIB group. Maybe just a little bit at the moment, Yvonne, about your own sustainability journey and what the bank is doing right now, because we know Colin's very clear strategy and mandate across the group, but could you give us some colour as to what's happening within the group right now?
Yeah, so I might just talk about the journey over 4 phases and talk about the last phase in a little bit more detail. So if I think back, you know, the first phase was really about building the foundations. So, you know, in terms of our own footprint and making sure we were reducing our emissions, you know, that journey started quite a number of years ago, and we've been reporting to CDP for the last number of years and have held the leadership rating over those last 5 years. And we started our first disclosures 5 years ago, so we've published a standalone sustainability report each year since. And 5 years ago, there was a governance board subcommittee put in place to oversee the whole sustainability agenda. And our energy, climate action and infrastructure team was set up a number of years ago to meet the growing demand in this space. So that's kind of the initial setting the foundations. I would say the next phase was around integrating it into strategy. So Colin would have been talked about sustainable communities being a 5th pillar in the group strategy. And that has been crucial in terms of really starting to embed ESG in everything that we do. And a couple of years ago came out very publicly with our pledge to do more and the 5 billion Climate Action Fund. And we signed up to the TCFD and the Principles for Responsible Banking to kind of really back up our commitment in what we wanted to do in this space. And then launched a number of green propositions. So our green mortgage, we had our first green bond, and we've been building out our propositions since. The next phase probably is where the rubber really started hitting the road in terms of, you know, setting out our net zero ambitions. So last year, we pledged to be carbon neutral in our own operations by 2030, and an aim to looking at scope 3 emissions for our customer lending portfolio to be net zero by 2040, with the exception of agriculture, and the full portfolio net zero by 2050. And that's, you know, quite an ambitious aim. And even though I would say we haven't a clear roadmap of how we were going to get there, it set out the serious, authentic ambition that we had around what needed to be done in this space. And then to back that up, we signed up to the Net Zero Banking Alliance, which means, you know, within 18 months of signing, we have to publish our science-based targets. And we're working on that at the moment and setting internal targets across our sectors, you know, clearly outlining the reductions that we need to achieve in our lending portfolios in terms of those emissions. We've also, I suppose, committed to various partnerships, you know, with Food Cloud, trying to reduce food waste. We've partnerships with Teagasc on the Grass 10 programme and the new Signpost programme, and, you know, I suppose sponsor things like the Chair in Sustainable Business in UCC. And I suppose if I move on to the embedding phase, because that's probably, in fairness, the most intensive and I suppose complex phase. So it's really looking at how we're embedding ESG across everything that we do. So we've set up a multi-year program of work. I've talked about the science-based targets, so we'll be looking to disclose those over the next period. We've just published a sustainable lending framework, and one of our ambitions and targets that we've set is that by 2030, 70% of all new lending that we'll do will be green or transition. So again, we need to be very clear and transparent around what is the criteria that we define lending activities to be green or transition. So we have published that externally, and we have started to expand the green lending activities that we're tracking in terms of meeting that target. And then if I look to new lending, so you know, in terms of new lending decisions, we have introduced an ESG questionnaire for customers who are, I suppose, are more prone to climate risk. So for those borrowers who are looking for material lending amounts, we have introduced a questionnaire that asks specific ESG questions to help assess the ESG risk. And that's really important. And those conversations are happening with our customers around the additional information and data that we need to capture to be able to assess that risk. And then also looking at the additional information to be able to classify the lending as green or transition. That's a whole new set of data requirements in terms of the purpose of the lending. And then looking at things like, you know, property lending in terms of, you know, the valuation of collateral and how that might shift as a result of climate risk. We capture things like, you know, the energy ratings, the geolocation, so we can understand the flood risk. So these are all kind of new changes to processes to be able to integrate better into, we'll say, the lending and credit decisions that we're making.
I think like what's really interesting in both of your perspectives that we've seen the kind of wholesale market, retail market, and within the retail market, of course, from households to SMEs to larger corporates and even the sectors. And that's crucial because it just can't be on the wholesale and the corporate side, it has to be across households as well. And I suppose the question would be that I would have, what exactly is the kind of the reception that you're getting from your customers to these products? I mean, I think there's probably a bigger understanding at a corporate level, but is it really coming through in terms of the retail market?
Yeah.
And how do you actually get that message across to people?
Yeah, so I think it is consumer-led. You know, we're seeing that. We're seeing the steps that customers are looking to make. When we launched our green mortgage, you know, in terms of, you know, green lending accounting for 20% of our overall new lending. To be honest, that's understated because we're not including all of that green lending, which we will be expanding our definitions across our systems. So, like even in terms of the engagement with customers around the questionnaire and the additional questions we're asking them, and around, you know, the purpose of what they're looking for the lending for, customers are expecting that. You know, they're understanding that we are serious around, you know, being able to assess the risk, being able to, you know, understand if they're eligible for green lending, because with those green lending products comes better rates, because we're trying to encourage that transition and those steps to be taken. So we've seen from our own research that our customers expect us, they want us, like all other organisations, to be playing our part in the sustainability journey and having the visibility and the offerings on our shelf to help them do what they need to do. So we've our green mortgage, we have a retrofit loan for people who want to upgrade the energy efficiency of their homes to A or B. We've electric vehicle loans. We've sustainability linked loans for customers who will get a differentiated rate on their loan if they reach preset ESG targets. So we've offerings across the patch, and we're looking to build those out more, but it's in response to consumer demand.
You mentioned earlier data, and it's something that Louise has mentioned to me in BPFI, the need to capture data, to agree what the data set is at a public and private level, because without the data understanding, we're never going to be able to calculate whether we're making the progress in this. That's one challenge. Any other challenges you see in terms of the net zero target in trying to get there? What other big challenges would you see?
So I suppose there's a dependency in terms of, you know, the policy changes and things that are happening, you know, in the market. So, you know, attractively priced propositions aren't going to be enough. You know, it helps make finance cheaper for customers, but there has to be other incentives and, you know, carrots and stick for people to make the changes that they need. And so they need to be in place for us, for the change to happen. You know, the 500,000 homes that need to be retrofitted, you know, that has to scale up radically in terms of to meet that target. The greening of the grid.
Have we the people here to do the work?
Well, I suppose that's a challenge, and that's you know, all the kind of component parts need to be working in tandem, because having the finance without the supply of skills, you know, isn't obviously going to make things happen. So and I think that's where probably our role is broader than just providing finance. You know, we have to, you know, through our collaborations and partnerships, you know, with Chagas in the agri side or whatever it is, we have to collaborate and help address the broader challenges outside of just finance.
And that's a point that you raised earlier about getting the projects and making sure there's a sufficient supply of projects coming forward. What can we do to encourage that, do you think?
I think it's more of the same, to be honest. I think there's a greater awareness since COVID, in my opinion, of all things sustainable. And we all need to do our own little bit. And I think we all have to take an element of responsibility for ourselves, whether it's, you know, the property you're buying and the rating of it, or the car that you're driving. And if we all do that, it's going to mean AIB is going to have, you know, more assets, which means that, you know, we're going to see the market continue to flourish.
The other point is, of course, there's also an opportunity here for the sector, because there will be a lot of new lending within the next, taking the IMF figures of the 20 billion every year for the next 10 years, at least 2/3 of that will be in the private sector. So there's a responsibility and an opportunity in terms of new credit formation. I think that shouldn't be underestimated from an investor perspective.
No, absolutely, and I suppose the new propositions that we've launched and continue to launch is, you know, with a view to supporting and leveraging that opportunity. You know, there's a lot of talk around, you know, the work that's required around embedding kind of climate risk and understanding climate risk and quantifying climate risk, and that is really important. You know, but the opportunity, there's you know, it more than outweighs the work that needs to be done in terms of the investment required to change and transform your processes, with the huge opportunity that exists. You know, and we, I think, in banking, are in a really lucky position to be able to really drive and fuel that change. You know, and I think that's really exciting.
Just maybe briefly at the end, I mean, what have you seen in your travels and working in different parts of the world? How far are we behind? I mean, we have a view of ourselves, which is we're miles behind everyone. And is that true, or is it just a kind of an Irish fatalistic view of the world?
It's an interesting question. I travel a lot in Scandinavia for work, and I think they're on the next level. I think this is, you know, we're still probably a couple of years behind where they are, but I think the interest and the appetite is there. People want to make the change that will get there. I mean, I think it's great, you know, walking around Dublin, that you're seeing like how our buses are fueled. That's very encouraging. So yeah, I think we're on the right path, but I think it's important that we are learning from our peers, and once we have that will to learn, I think that's good.
And I think that will to learn comes as well from the sector. I speak to lots of people in banking, younger people like yourselves, who are actually demanding of excos and CEOs and CFOs and everyone else to make the difference. And I think that should not be underestimated in the actual transition that we've all got to do, that there's a huge push within the sector to make this happen.
Yeah, and actually we're seeing that, you know, our colleagues in HR have fed back to us that is a question that's asked by all the grads coming in, in terms of, the reason they're attracted to AIB is because of our sustainability credentials and our authentic, I suppose, desire to really lead out in this space, and that is really attractive to younger people. And that's an advantage for any organisation that's looking seriously at this.
Brilliant. Well, listen, we've got two fantastic perspectives today from a wholesale international bank based in Dublin for only 5 or 6 years.
Less
actually.
We went live last year.
Yeah, and the success that you have, and the great work that's gone on TD Securities. Congratulations on that.
Thank you.
And thanks a million for the experience today. To one of our domestic pillar banks and the great work that's being done here in AIB, we really appreciate that as well. So I really want to thank Laura and Yvonne for your contributions today in the studio and seeing how we're going to hit those targets and make sure we make the difference. Next up is Curtis Ravenel. He's advisor to the former Bank of England Governor Mark Carney. And I think yesterday Stephen Nolan caught up with him, so let's hear what he had to say.
Curtis, thank you very much for joining us today. As always, it's a pleasure to see you live from New York. We're really thrilled that you're able to make the time for us today. Before we get going, I'd just like to recap who you are so we can inform our audience. Curtis is a senior advisor to former Bank of England Governor Mark Carney, COP26 Finance Advisor and UN Special Envoy for Climate Finance. Curtis is also a founding member of the Secretariat for the Financial Stability Board's Task Force on Climate-Related Financial Disclosures, or TCFD. He also serves as a Distinguished Fellow in Sustainable Finance at Climate Works Foundation. He founded the Sustainable Business and Finance Group at Bloomberg LP and served as its global head from 2007 to 2019. In 2011, he was awarded a David Rockefeller Fellowship with the Partnership for New York City, and in 2013, he was appointed by the Obama administration to serve on the US chapter of the G8 Advisory Board on Impact Investing. In 2018 to 2019, he served as the only non-European appointee to the European Commission's Technical Expert Group on Sustainable Finance. Curtis, it is a real thrill to have you here with us today. As I said, I consider you a good friend, but you're also incredibly insightful on this topic. And so we're really looking forward to you providing some of those insights to us about what's happening in COP around the private finance side of COP. So if you don't mind, I'll just jump straight into the questions. Mark, as noted, is in charge of the COP26 Finance Private Finance Agenda. In your capacity as advisor, what are the key initiatives and expectations around this topic for COP26, please, Curtis?
Yeah, first of all, Stephen, thank you for having me. It's a pleasure to be with you all again. I enjoy our conversations, whether they're public or private, and I'm glad this one's public. So with regard to the private finance agenda for COP26, there's sort of 4 primary deliverables. One is around reporting, and that key initiative is a path to mandatory for TCFD. And as many of your viewers are aware, you have the European Commission is developing their own disclosure framework. You have the SEC taking a hard look at this and likely to release recommendations or just rules around disclosure either at the end of this year or next. And of course, the IFRS has signaled it's launching an International Sustainability Standards Board to sit next to its Financial Standards Board, the International Accounting Standards Board. These are huge developments. All of them have signaled that they will use the TCFD as the foundation for their regulatory approach to disclosure. The TCFD was formed by the Financial Stability Board, as you noted, but it's been private sector led and run for the market by the market. But at the end of this week, we're going to release a status report on the current state of climate-related financial disclosure, as well as some enhancements to our implementing guidelines around the recommendations that really calls for more robust reporting in this area. So we do welcome the regulatory engagement in this. It's time that we really got clear, comparable, and consistent climate-related disclosure. Without, good information is the lifeblood of good decision-making, and without it, we're all lost in this fight. The second pillar of Mark's agenda is around risk management, and that's primarily focused on central banks and how they are looking at their own book and stress testing it against plausible future states of climate, as well as the financial institutions they oversee. The third pillar is around what Mark calls returns, and it's really about transition planning, how you align your portfolios if you're a financial institution with a net zero pathway. And in order to do that, he launched something called the Glasgow Financial Alliance for Net Zero, which is really a number of leading CEOs that represent the other sub-alliances like the Net Zero Banking Alliance, Net Zero Asset Owner Alliance, Net Zero Insurance Alliance, and so on, in really an effort to kind of coordinate the different activities around net zero within the financial sector and act as a clear voice and consistent voice, not just to solve internal problems within the financial system or on how you tackle some of these challenges, but also speak with one voice to governments and to the real economy on what their expectations are. And today, in fact, GFANZ released a call to action for G20 policymakers, which you can find on the GFANZ website, basically outlining what they need in order, they've made their commitment, but we all know that a stool stands on three legs. So you need real economy, policymakers, and financial institutions to play their part. We now have nearly 300 financial institutions with 90 trillion in assets that are committing to transitioning their businesses to net zero consistent pathways, but they need the support of those other two areas. Lastly, but definitely not least, is mobilization. We need trillions of dollars in new investment in green, sustainable, and clean energy and other areas around resource intensity. We need nature-based solutions. We need cross-border flow. We need to build back better. This is all a big ask. And so Mark has launched a number of initiatives under the mobilization work stream, of which GFANZ will pick up to try and turn what's currently, billions of dollars of investment into this into $1 trillion of investment. So that's, small level agenda that Mark's got. So, we're feeling very good, for what it's worth, about our progress on those 4 areas coming into COP.
It's fascinating, just the breadth of what's happening and what's going on. And obviously this has been going on for quite a long period of time as well. If I can just unpack 2 of the points you mentioned, Curtis. One, the first one's on TCFD. So you were good enough to support Irish efforts earlier on the summer around the masterclass on TCFD. And that goes live later on today. Mayor Shapiro is going to be involved. Mayor Bloomberg himself is also going to be involved, which is super. And there's going to be an update on the Irish TCFD campaign. As you know, is mirrored on the Japanese TCFD campaign, which I now believe the Mexicans are actually looking at their own equivalents. So the Japanese TCFD campaign has really been copied around the world to various degrees of success. And the Irish one is going to be very, very successful. A lot of firms later on today will be announcing that they signed up to TCFD in advance of COP, and you helped the Irish team kick that off. And obviously Mark Carney last year during Climate Finance Week with Minister Donoghue kind of began that journey. When we look at what's going to happen later on during this week in terms of the updated implementing guidelines, what sort of impact do you think that's going to have? I suppose in the context, as you said earlier on, the EU, the SEC, the IFRS, all looking at TCFD as their kind of baseline in what they're doing. Please, Curtis.
Yeah, look, I think we would all those of us who've been working in this space for a while, think about when the TCFD launched its recommendations in 2017. It was just 4 years ago, but the field has progressed so much. So we felt that we needed to, especially with the increased attention from regulators on TCFD as the foundation, that we needed to update to reflect developments in the field. And so that includes things like, stronger language on the importance of emissions disclosure, the importance of capital deployment on green solutions, the importance of risk management, particularly when it comes to physical and transition risks, and whether or not you use carbon pricing, and if management and board incentives, remuneration incentives are aligned. These are already in the TCFD, but we've elevated them to be sort of point them as the core building block. It's not by accident that the group of 5, the other voluntary standard setters, TCFD is not a standard setter, to be clear, right? But the other group of 5 also elevated these issues in December of 2020. And now as the regulators move into it, we wanted to, do some work for them, frankly, and say, hey, we did a consultation on these. We have broad support from the market that these need to be core foundational parts of disclosure. And then on the financials, we're also calling for all organizations to disclose transition plans, which we think is very important. And GFANZ, of course, just in their call to action, asked today that governments make mandatory transition plan disclosure by 2024. These are, again, 300 of the largest financial institutions in the world. So we're laying a marker down on the importance of transition plans, and for financial institutions, how you measure progress against those transition plans using portfolio alignment. Is your investments and the associated emissions with those investments aligned with a 2-degree or lower scenario? And that the importance of having visibility into that for both the planet's sake and, frankly, for financial stability's sake. I think, we acknowledge that if we do not try to keep the temperature below, the consequences of that for financial institutions, their investments, underwriting, and lending decisions is arguably going to be very significant. And so those are the kinds of things that we will that will be in our updated guidance on Thursday is when we'll release it. So please look forward to that. And unfortunately for you all, we're going to have to develop a whole bunch of new training material to add that. I do want to be clear: the recommendations themselves are not changing. It's the guidance that's just being updated.
Okay, no, I understand that. And look, this is where the Irish Sustainable Finance SkillNet comes in. You can actually develop a program around them, around the new guidelines, and actually get the Irish located financial service professionals upskilled. And within that network as run by Colette. Can I unpack a little bit about GFAS as well, if I'm pronouncing that correctly? So, again, you've explained where it's come from. It's incredible. It's just staggering, the figures that you mentioned in terms of the different entities involved, policymakers, real economy, financial institutions, that kind of, as you said, that stool and the different people needing to support each other. But you kind of alluded to, what's the ambition after COP? So at COP, these things get pushed out. How is it resourced? How is it going to, where do you hope it's going to be in 3 years' time? And maybe that's too long of a window, but what are your expectations, Curtis?
No, so a couple of things will happen at COP. Today we released a call to action. Obviously at COP, we will update, we had JP Morgan join, which is a huge deal recently, the Net Zero Banking Alliance. I mean, to be clear, the commitment here from financial institutions is that they commit to really reworking their entire business model to be aligned with net zero. That is not an easy task. And they've got to come up with interim targets for 2030 that must be low or no overshoot scenarios. And that kind of assumes that we'll, as part of their fair share of a 50% overall reduction in financed and facilitated emissions in that time period. And you have to report progress against them every year publicly. And so, this is a journey. It's a long journey. And as you pointed out, GFANZ needs to stick around to ensure that journey is a successful one. And so what you'll see GFANZ do is, one, there'll be an updated list of participants under those various alliances I mentioned. It's about financial system overhaul in the end. So we need to get everyone in. That includes credit agencies, financial data providers, index creators, et cetera. It's going to be really important. So we'll announce new membership, and hopefully it'll be even bigger by the time we get to COP. I'm working on that. The other thing is that we will produce a work plan. There are 7 work streams under GFANZ around real economy transition, around policy engagement, around recruitment, around financial sector transition planning, around portfolio alignment, measurement, and lastly, but not least, around mobilization. So this work, the goal is is net zero by 2050 or before. So arguably we should stick around for quite a while. And so we will launch at COP that work plan for the next several years on what the various work streams. And it's important to note that these work streams are CEO led. So these institutions not only are committing to do this, but they're putting up their own internal resources to collaborate with others to try to drive everything forward. There, of course, we have advisory groups of key non-governmental organizations and technical experts to help all of this on their journey, and there'll be funding by philanthropic organizations and the like. So we're excited, but Mark and myself are committed to sticking with this post-COP, just to be sure. We know this is not a one and done moment.
Exactly, Curtis. And I suppose as we build towards COP or during COP, especially this year with COVID. The risk for COP is that, it doesn't, what happened in Paris does not happen in Glasgow. But if I can be selfish, and I understand that the key enabling role that finance has on for energy and all the other sectors which are important about COP, but it really talked with you today, Curtis. I'm getting this, a great sense of energy from you, but also that urgency, the resources being put in place to allow us to keep going after COP. But it really feels that the 3rd of November, which is Finance Day, or the Private Finance Day, there's going to be a lot happening. There's going to be a lot to be said, but importantly, go back to JP Morgan, there's big companies now getting on board and signing up to real targets. Is that what we're really looking to happen here?
Look, just speaking frankly, we all know that we need to do more faster. All of us, everyone. The key is this is systems change. You can't turn on a dime. In our view, you need to bring people into that system to be proactively working for how you do this. Divestment is, of course, something that is up to a financial institution to consider. But what we really need is investment in transition. And by having these large, what I call, it's not what I call them, they're systematically important financial institutions, commit to that pathway is an enormous achievement. Is it enough? Absolutely not. But the key is to get them into the tent, in the tent, to work together to try to solve these problems. We have to be careful. If we were to turn off all fossil fuel financing today, you could see unintended, for sure, consequences on other bad actors who don't have these commitments financing them, number one, or number two, wrecking economies and communities without thoughtful prudence. So the goal is to bring these folks in, to have them make a commitment to provide credibility under the race to zero criteria, which is the expert peer review group, is academics, NGOs, and others who have really kicked the tires on these commitments to make sure they're credible and consistent with net zero. And then let's be honest, one thing we've learned about this field is as soon as you figure out what the path is on anything, they change the goalposts because of the nature of the science and the nature of the economy. And the goal is to bring people in so that we can effectively, create what many will call a smooth transition instead of a disruptive one.
Great. Right. So, Curtis, I'm conscious of your time. I suppose my last question is a personal one. You still enjoying it? You're still got the buzz for it in terms of, TCFD, fans. I'm sitting here going, when the book is written on sustainable finance, Curtis, your name is going to be over a lot of the different areas. You're still enjoying it?
Well, if there's an initiative with an acronym in it in the climate finance space, I somehow am drawn to it. Maybe that's my, nearly 20 years at Bloomberg, and anyone who's used Bloomberg knows it's a lot of 4-letter commands. Yeah, I mean, as I hope you can tell, I'm completely energized by this. It's easy to sit back and say, we are so far behind and we are not doing what needs to be done. That's true. We need to do more, but boy, have we come a long way in the last 5 years. And if we have the same kind of momentum that we've had in the last few years, in the next few years, then we're talking about exponential improvement. And what choice do we have, right? We have to push full-fledged. So I'll certainly continue to stay engaged in all these initiatives if I'm lucky.
Brilliant. Well, look, Curtis, I could hear I think it was a New York ambulance or a police car in the background a minute ago, and it just reminded me I'm missing New York. It's been a long time since I've been there. So look, I hope to get over before Christmas and hope to grab a coffee with you. Curtis, we really appreciate you giving us time today during Ireland's Climate Finance Week. You've always been a great supporter, so have a great day in New York. Thank you, Curtis.
No, well, thank you for having me, and let's make that a beer instead of a coffee.
Thanks, Curtis.
Cheers,
have a good day. Bye-bye.